Hey everyone, welcome back to Corporate Decoder, the place where we decode those endless corporate filings to find the juicy bits. Today, we're diving into Blue Owl Credit Income Corp. And let me tell you, they've been busy cooking up a pretty interesting deal. So, what is this all about? Basically, on the 24th of September 2025, Blue Owl Credit Income Corp, which we L call the company from now on, pulled off a massive deal called a CLO transaction. Think of it as a really specific way for the company to borrow a ton of money, $1 billion to be exact, by packaging up some of its business assets and selling them off to investors. This wasn't a direct loan to the company itself. Instead, it was done through a special subsidiary called Owl CLO X the Twent, LLC. This subsidiary acts like a separate entity that holds the actual assets being used as collateral and handles the borrowing. The assets are primarily middle market loans, which means loans made to medium-sized businesses. Now, let's talk money. To get this $1 billion, they issue different types of debt. There are the secured notes, which come in a few flavors with ratings like triple or double SF. These are considered safer by investors and carry lower interest rates tied to something called SOFR, plus a spread, for example. The class of notes have a rate of SOFR plus 1.47%. Then there are the loans, like the class of -1L loans, also at SOFR plus 1.47%, and other loan classes with slightly higher interest rates. This entire package of borrowing is secured by the loans and other assets held by the subsidiary. The big payoff date for this debt is set for October 2037, which is a pretty long time away. But there is more. On top of the debt, they also issued preferred shares. These are like a different kind of ownership, and they raised about $262.7 million from these. The company itself bought all of these preferred shares. Why? Well, it is to meet some strict rules that require companies doing these kinds of deals to keep some skin in the game, meaning they have to keep a piece of the risk themselves. To fuel this whole operation, the company sold a bunch of its own middle market loans to the subsidiary. They sold about $496.7 million worth of loans initially, and they replanning to sell more over time. To add to the pot, the subsidiary also bought other loans from another of the company, S subsidiaries, Core Income Funding IV LLC. Overall, the company and its subsidiaries basically transferred nearly $1 billion worth of loans to this new entity to back the deal. It is pretty clever how they move assets around to get the financing they need. And who is calling the shots on managing all these loans now? That would be Blue Owl Credit Advisors LLC, or OCA, the company's own investment advisor. They're in charge of deciding what new loans can be bought with the money raised, as long as it fits the company's strategy and they can find eligible loans. OCA gets paid for this management, but they've actually waived their fees. However, there is a catch if they ever decide to take those fees back. It could impact the management fee the company pays to its advisor. So, what is the money for? After covering all the costs and fees associated with this massive transaction, the company plans to use the remaining cash for its general business needs. This is pretty standard for these kinds of financing deals. To wrap it all up, this filing is essentially a detailed report of this huge CLO transaction. It lays out all the agreements, the parties involved, and the structure of the debt and equity issued. The key documents include the indenture and security agreement, the collateral management agreement, and the loan sale agreement. Now, let's try to think about this from a Warren Buffett perspective. This CLO transaction is a way for Blue Owl Credit Income Corp to effectively leverage its assets by securitizing these loans. They're turning future receivable income into immediate cash. The fact that they are acting as the retention holder, meaning they retain a portion of the preferred shares, shows confidence in the underlying assets. However, it also means they are directly exposed to the performance of these middle market loans. The success of this deal hinges on the performance of those loans. If the businesses those loans are made to struggle, it could impact the repayment of the debt and the value of the preferred shares held by the company. The reliance on Blue Owl Credit Advisors LLC as the collateral manager is also key. Their expertise in selecting and managing these middle market loans will be critical. If OK makes good choices and effectively manages the portfolio, the deal should perform well. If they misjudge the market or loan quality, it could lead to defaults and losses. The waiver of collateral management fees for now is a smart move to signal confidence and perhaps maintain better overall profitability for the company by not having to pay those fees directly, but the clause allowing them to rescind it means they're keeping their options open. Essentially, Blue Owl Credit Income Corp is using its lending business as a funding mechanism. By offloading the credit risk and the need to hold all that capital on its own balance sheet, they can free up resources for other opportunities or to return capital to shareholders. However, the risk is that the loans themselves turn sour. The diversification of the loan portfolio is important here, and we'd need to see more details on the types of businesses and industries. These loans are in to get a clearer picture of the overall risk profile. In conclusion, this CLO transaction is a significant move by Blue Owl Credit Income Corp. It is a sophisticated financial maneuver to raise capital and optimize its balance sheet. The strengths lie in the potential for increased liquidity and a more efficient capital structure. The main risk, as always with securitization, is the performance of the underlying collateral. If the middle market loans hold up well, this will be a feather in their cap. If not, it could create headwinds. It is a testament to their ability to innovate in financial structuring, but investors should keep a close eye on the delinquency and default rates of the loans within this CLO. Alright, that's our breakdown of Blue Owl Credit Income Corp's latest filing. What's your take on these numbers and what they signal for the company's future? Do you think this CLO transaction is a smart move or a risky gamble? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate finance. Don't forget to check out our Discord community linked in the description for even more discussions and insights. Thanks for watching, and we'll see you next time on Corporate Decoder.